What happened?
Access to this webinar is for educational and informational purposes only. Consult a licensed broker or registered investment advisor before placing any trades. All securities and orders discussed are tracked and monitored in virtual trading accounts. Virtual account prices and returns may differ from actual trading results. Commission costs are excluded. Neither PhilStockWorld.com, PSW, nor its affiliates, nor any of the respective officers, personnel, representatives, agents, or independent contractors are in such capacities licensed financial advisors, registered investment advisors, or registered broker-dealers. Nothing contained in this webinar, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Trading options involves risk. Visit the OCC website, www.optionsclearing.com, to read characteristics and risks of standardized options. PSW provides education and training services that are meant to teach you to the risks and potential rewards of trading options, and we are not a service that tells you what to trade. We are not implying or guaranteeing any profit. As always, do not trade with money that you cannot afford to lose. Past performance does not equal future results, and results discussed in this webinar are not typical and are only valid on that specific or identified date. Your results may vary. By accessing this webinar, you agree to hold the above harmless from any loss you may incur as a result of information discussed in the media are identified above.
All right.
By accessing this webinar, you agree to be placed on our mailing list and receive our newsletter. Rest assured, we take your privacy very seriously, and we will not distribute or sell your information to anyone.
Now, are you done? I don't know what's with him today. He's very slow. All right. So I guess he's distracted in there. World domination plans. How are we doing? Let's see. Hang on. I'm going to make a shrinky dink on that and a shrinky dink on that. You guys can't see it, but I have things on my screen. Oh no, why won't this go away? Uh-oh. Uh-oh. What did I do? Oh, there it is. Okay. Aha! All right, got it. All right, now I can see my own screen. There's all kinds of control panel stuff on my end. All right, so we this is cool because now I gotta move this. Okay, go over there. All right, so here we are, innocently having our day in PhilStockWorld, and I just want to show you what what we say and what actually happens. So we started our day. Wait, I gotta move this thing. Can I move this thing? That's not good. That's the only place I can move it to. All right. So we started our day. Joe, we didn't really talk about any particular trade earlier. Well, I should go to the other day. Sorry. We start our day in the morning, and in the morning, here's what we were talking about. Move this way down. Okay, so that's not the morning. Here we are. All right, so we were long on the Dow going into night, and we kept two longs and it hit $1,300 gain on that. We had a goal based on what we expected the bounce lines to be. Now, where were we? We were here, and at 25,000 we expected, because we came down from 25,500. But really, in the same day we came from 25.4. So call it a 400-point drop, and that means you get a 20% retrace is going to be your weak bounce. That's going to be 80 points is a weak bounce, and 160 points is a strong bounce. So the 5% rule at the time predicted that we should look for 160-point bounce. So what do we get here? We get 500, 25, and this is 25.6. No, I'm sorry, this is 25,000 even, and then 25.2 is up here. This is 25,160. So basically, we've got exactly the bounce we were looking for. Excuse me. Oh no, I can't have a cold now. That's not good. I think it's just allergy. Anyway, so we got exactly the 160-point bounce we were failing. Now, the strong bounce line failed in the morning. We got to the strong bounce line, and we sort of were failing it. So then what happens in the morning? So then I come on in the morning, and I say, The strong bounces have taken us, this is, what, 7 a.m. The strong bounces have taken us to these points, blah, 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 which is where we expect it to be. So the bounces there should have been 30, blah, blah, blah. Okay, we paused at the strong bounce lines. Now it comes down to the news and the data flow to see which way we favor, right? That's what I said here. Then I said the VIX is more than a strong retrace. See the VIX? At the time, it was going down, and I said, well, that would fit, since the VIX is more than a strong retracement of the move was a point, a little bit more than a point, so they should have been 0.4 retrace would be strong. 40% retrace would be strong. So right about here would have been a strong retrace. So the VIX was looking like it was really blowing past and was going to go lower. It didn't, though. It made a turn. And that indicated once we saw it turn back up, we knew that suddenly the market was getting weak again. That was well before it opened. So as a hint, I said just wait for 2 to go over and preferably grab the S&P with 2780 or the Dow as it crosses over 25,160. Neither of these really panned out. Then we looked at the API numbers and decided they were generally bearish for the oil. Then we talked about the 5% rule in some detail. This is all like early stuff. This is all before the market opens. Then once the market opened, I did my post. I didn't really have anything to say about the market in the post. I was just talking about this. I was talking about the trade war and the UK going to war with Russia. Those are kind of important things. So then once the market opens at, it's like pre-market news out here. Here's the market open. So then at 10:15, I came in and I said, nothing. Actually, nothing there. Nope, guess I didn't have anything to say over there. Oh, I remember one thing I said. Yeah, wait a minute. Oh, here it is. The market, we were going up in the beginning, and I said I can't see how rising inventories are a good thing. How is it you see January business inventories up 0.6%, which is a lot. In 1 month, you have a 0.6% increase in inventories. If that happened 12 times in a row, you'd be up 7% in inventories. What does that mean? It means the factories are making more than the businesses are selling. So inventories are piling up. That's a very simple concept. We had a build in December and a build in January. Now, the problem with that is you shouldn't have a build in December at all. First of all, it's supposed to be, that's when the inventory is supposed to draw down. So if you had a 4% build in inventories in December, when the hell are you going to sell your stuff? And then a 0.6% build in January. That means in 2 months you had a 1% build in inventory in the 2 months of the year where you're supposed to be selling all your stuff. That's not good. That doesn't bode well for the entire year once you get into that point. So then we talked about the Dow failing yesterday's lows as those bounce lines have failed. The Dow's failing. The Dow is failing the lows. Now we're talking about some tweets. Mixed messages on oil. This is 10:40 now. Mixed messages on oil, but no positive reaction to the headline. It's not a good sign for crude because it's got a 5 million barrel build. And I said, if 5 million can't pop them, then 60 is going to go down. I said, well, and so far it isn't, though. So far 60 is holding. But I decided, and then, we decided to go long on natural gas. Where was it? Oh, I think, okay, I'm not sure. I'll show you. We'll look on the chart. Then we decided to short gasoline because it popped up to 1.914. I'll show you why. We're going to look at the, it is 1 o'clock. We'll look at the detailed crude oil report. But so we missed the spike here, but over here I said let's short gasoline. And we had a nice big drop actually. 2 cents in gasoline is $800 per contract. So that's a really nice drop in gasoline. And I talked about it here also. Where are we? And then now at 11:23, we started falling below the lows of yesterday. So I said that the Russell would be the best shorting line if we break down. That's going to be 1590. And here's what it was lined up with. And well, just so we have some kind of tracking. Where's the Russell? Here. So we didn't get a big drop for the Russell, just a little bit down, so it wasn't a big deal. What we actually did though is when it got to the next stage, we switched to a long, which did exactly what we thought it would do. But we think we're heading generally lower. This is a review of the long-term portfolio. So playing for the Dow after the bounce, after 400-point drop to 24,750, cashing in the short positions. So I called the, you called the bottom at 1156, and let's look at where that is. Here's the Dow. So 1156. So right here is where I called for a bottom. That says 1155 on the bottom there. So right here at this spot is where I called the bottom. And I said we're going to play for the 100-point pop. And that's exactly what we got, was a 100-point pop. Now, 100-point was a weak bounce because it's a 400-point drop and it's a weak bounce. 80 points really would be actually the weak bounce. But actually what happened is 24.7. But then we fell a little further to 24.7. I said, whoa, that's down 500, so I'm definitely playing long now. So this one failed for 50 points. Then this one we went back into, and we went long for the bounces. We got all the bounces exactly how much we thought we'd get, and now it's going even lower. And we could end up with a very, very nasty day if this thing all breaks down right now. So we'll look at a bigger view. If you look at the not those, these. Here we go. So here the Nasdaq was here at the low, yesterday's low here. The S&P is crushing yesterday's low. The Dow is crushing yesterday's low. The Russell is crushing yesterday's low. So if you want to be a betting man, I bet the Nasdaq to go lower at the moment, unless the S&P holds up here. So basically, once the Russell. If the S&P fails 2750 and the Russell fails 1590, I would bet good money that this thing's going to go down quite a bit. So let's take a look at that right now. So here's the Nasdaq. We are failing 1590, and we're just on 2750. So I'll make a small bet. I'm just going to bet right now. Let's see what we got here. 625 is good. Maybe. There it goes. Okay. So now I've got one short at 706.275, it turns out. And what I'm looking for now is I want to see him stay under 1590 on the Russell, and I want to see the S&P fail. I'm going to feel comfortable once the S&P fails that 2750 line. Sorry. And then the Dow this time should fail 24.7 if we are getting a good sell-off. So we'll see what happens. All right, but you see, it took like 10 seconds to make 45 bucks. So I mean, it's not worth me locking that in, but I'm just saying it's a really good way to make some quick money. Let's see. Actually, what is this? Oh, I know what. There we go. That's better. So, futures trading is not hard. You pick a spot, you click on the thing, and it goes down and goes. You have to make sure it's set up that way. If you use Thinkorswim, they'll totally help you set it up so it's easy to use. Oh, here we go. Now, the key is you want to keep making your levels. You want to keep setting goals and seeing them crossed. Like, we definitely want to see 50 break over here. We definitely want to see 1590 does not get taken back. So I only have one contract, so we're not going to make much money on this, but we will see. So you keep watching up 55.05. Now, if he bounces, I should probably take my quick profits, right? So it's 5.05. I'm totally watching that one indicator right now because that's a significant cross on the S&P. And and my finger's on the trigger here, ready. See where it says instant buy? That little box there says instant buy. And that's what I'm looking to do. It's like if what happened? Oh, damn it. I accidentally clicked it. Oh, well. It worked out anyway because he ticked up. See, that's the thing. I had my finger on the trigger. So by accident, I got out at a pretty good timing. But it went from 50.5 to 50 to 51. And it wasn't worth staying in. I made my money. Now, why isn't it worth staying in? Because I don't need to be in this one. If he fails 50, then he becomes a good short with a very, very easy stopping place at 50. Right? So I don't need to keep in the same one. I can switch. It's what we call getting a fresh horse. It's like the Pony Express. They used to ride the horse until it was exhausted. Then they jump on another, then they get off on another horse. And then ride that one until it was exhausted, then move to another horse. That's what we're doing here. We're getting a fresh horse. We get the one that looks like it's most likely to go down. We ride that until it stops. And then we look for the next one that looks like it hasn't gone down far enough to catch up to the others. But in this case, he was at a significant line. I said, if that line breaks, I don't mind holding on. But if it doesn't break, I'm going to take my quick $90 profit. You know, what was that, 2-minute trade, right? So if I can make $90 in 2 minutes, and again, obviously I'm not going to make that 30 times an hour. That would be crazy. But if I can make $90 in 2 minutes, it means all I have to do is have 3 or 4 opportunities like that per hour, and I'm making some good money. You don't need to constantly be trading. You pick your right spots. You wait to get significant crosses on these lines that give you a good backstop in case you're wrong. That's the key. If you want to pick places where you want to have a reason that you're shorting, number one. You want to have a good backstop. My reason for shorting is what I wrote in the article today. Is we're like, we're getting on the brink of war between England and Russia, and we're having a trade war in America. And Trump is so happy with the trade war so far. He's now expanding it to China, and now we're going to war with China over trade. It's just too much craziness. It's like there's plenty of reasons for the market to go. I think I'm going to drop 1,000 points again. So that's what we're looking for, and I hope to have a short on when it happens, not just the hedges, but I mean an individual short that's going to make some money. And so we're looking for a bigger breakdown today than what we had. We're looking for a pretty serious drop. So yesterday, I think we finished down 200. Now we're down 300. That's an accelerating decline, right? If we stay down here, that means we're falling faster today than we did yesterday. So if you're in an accelerating decline, obviously you keep betting it's going to go lower, because even if it decelerates, you're still going to go lower until it turns around. So it's not that likely that this is the floor. It's actually it's much more likely right now that we're going to head quite a bit lower. Wait a minute. Something's going on. I got like a bunch of messages coming in. So let me see what's going on. What's so important? Pick up phone. Oh no. Dad, Beyonce is going on tour again. Title subscribers get pre-sale access. That's you. That was the emergency. Everyone at my webinar is thrilled to hear that. Exclamation point. Okay. I thought there was something horrible happening. I heard my phone go off and the iPad went off and the other thing went off. Beyonce is touring. All right. I guess I'm going to end up spending money on those. All right, questions. No questions. Look at that. Everybody's talking about the screen. Fantastic. I can just keep rambling. Love it. All right, so what else is going on? So as you can see now, the longs are not holding up now. We don't know, as we talked about this last week, and now we got to go look at the news. And why can't I sign into this? This thing does not know me. Oh, because it's on Jackie's thing. I keep forgetting that. This is Jackie's machine, so I don't have my sign-ins. Larry Kudlow. Here you go. If you want to sign to the apocalypse, Larry Kudlow is now going to be the White House economic advisor. Aluminum tariff. Theranos, Theranos founder and president faced fraud charges. Right, so there's no news here that's moving the market. So nothing here is very important. So we're just drifting based on what we know is going on. Now, of course, Europe just came to a close, so we have to. They may have been the ones that were doing a lot of the selling here. Jackie writes, "I know they'll be thrilled to see you buy me tickets." Is that true? Tell me if I should buy Jackie Beyonce tickets. You know, I don't even know her music. It's terrible. I'm aware of Beyonce, but I don't really know even her songs. So basically, it looks like we're bouncy here. Now, if we're going to be bouncy, it goes to the same thing. We calculate, where did we fall from? We fell from 25,150 to 24, call it 24.7. So let's see, that's 450 points, right? So 450 points means, let's call it 100-point bounces. So the first bounce line is going to be 24.8, which is right about where we are now. That's a weak bounce. So if you see 24.8, there's nothing to get excited about. And you don't have to do the math over and over again. You can see on the chart, like, okay, well, that's what a weak bounce looks like. So a weak bounce is basically back to this W, back to this part of W. So that means we'd be looking for around here and around here and around here. Those are the bounces. So right now we're going to see if he goes over. Now, if he goes over 24.8, then probably the other guys are going to start going up too. So then we want to say, well, who's lagging? Right now, I can tell you right now who's lagging. It's the Russell. So the Russell or the S&P are both ones that you could bet bullish if we go above 24.8 on the Dow. And these are just technical bounces now, so it's nothing to do with fundamentals. Now we're just watching technically to see if it's going to bounce. On the S&P, I guess if we're above the 5.5 line, that's not a bad backstop. It's probably as good as the Russell is. And I think maybe we can get a little bit more mileage out of the S&P. So let's call that our long. If the Dow goes over, we need 4 points on the Dow and we can execute this long. And then it has to stay over, otherwise we're not going to stay in it. And you see the discipline, because you have to be disciplined, because we're not really getting our line on the Dow. And if we're not getting a line on the Dow, we shouldn't be executing on the S&P. Just because it goes over where we want to buy it doesn't mean we should be buying it. We want to get confirmation from the other indexes that they're all heading in that direction, because that's why we look at the weak bounce line. That's why we do calculate it, because we know it has to be 24.8 or it's no good. So if we're failing at the weak bounce line, that then turns into a bearish sign. And then you say, well, who do we want to short? Instead of who do we want to be long on, who do we want to short if these things are failing? And now for shorting, it's back here to the NASDAQ, because 75 should be a good backstop. So on the whole, I can't tell you one way or the other, and we're over 75 now. Can't tell you one way or another which way it should go right now, because we're not getting any good confirmations. He's below the line. Now he's below 90. He's above 75. He's below 24.8. And he's below 27.55. So below, on the line now, and above. So you need to see 3 going your way, and then you want to take the 4th one the way you want it. Now, I don't have any particular bias right now as to which it is, because it could easily bounce. So I'm just looking to make another quick play and pick up another $90. Because the point of this lesson right now is to show you how you can sit here and play these things and not really care about which way it goes, but just pick up a little bit here and a little bit there. But you can't do that by forcing it. You can only do that by patiently waiting. It's like fishing. You have to patiently wait for the right alignment, and then you've got to make your move. So now we're under 55, under 00, over 75, and on 90. Ticking over 90. Over 75, under, and under. Coming up. Come on, a little bit more. Oh, come on. Really? Can't make that? Oh, that's pathetic. And if they keep failing at these little we're just setting these little tiny goals. It's not a big goal we're setting for these things. If they keep failing the goal that's bullish, then what does it mean? It means obviously it's getting a bit more bearish. So we'll see. So now I'd be more inclined if I see the Nasdaq give up on 75, that's probably going to be a bearish signal. But he's over now. He's over. He's just under, and he's over. Uh-oh, now the Dow is trailing. Now, uh-oh, it's looking good for the Dow now. 97. There it goes. All right, so now we can go long. Who are we going to go long on? All right, S&P. He's closest to the line. He's at 55.50, so I'm going to go long on the S&P. My stop's going to be a bit below, but hopefully we'll catch a little ride up. So what am I looking for? Now everybody's got to hold the lines. He's 805. He's 79.25. He's way over. He's at 1.2. He's way over. Not way over, but you know what I mean. Oh, 801, 802. Fail. He failed. One failure, and if I get another failure, I got to get out. Oh, he came back, and he's back. Oh. So I'm even right now. The Dow's barely holding his line. So it's not looking like the best setup right now because the Dow isn't really plowing higher. But on the bright side, the Russell is plowing higher and the Nasdaq's plowing higher. And obviously the S&P is way behind. In fact, I can actually get another one right now. I wish the Dow would be a little bit better, but I'm going to take another one. No, wrong side, wrong side, wrong side. Stop. Oof. Wow. Oh, I can't fill these. That's weird. I'm trying to buy another one at 55. 91.4, 76.5. Still under. Nope, I'm not getting confirmation on the Dow, so I'm killing my... Oh. Uh-oh. There it goes. I didn't get the confirmation, so I killed that order, and I'm actually going to get out if anybody else is coming down. Look, 90.9, 90.6, not good. Oh. No, going the wrong way. 75 bucks. Kill it. All right, that one didn't work. And that's because we were not getting the clear signals we needed, and now ultimately we're failing. So now we're inclined to look, maybe it's going to go lower. If it's going to go lower, we're back to shorting the Nasdaq because they're still the highest one up. You know, they're right at the top of this link here. Nobody else is up there. Maybe kind of the Dow. So let's try that again. I wish they were closer to 75 though. It's not a really good shorting line. You know, the key is if you're going to take a quick, you got to take a quick profit, but you got to take a quick loss too. Otherwise, what's the point? So 69, still at 90, 70, up 70 point whatever. All right, well, try long again. If at first, right? Can't fill it. How annoying. Oh, I don't want to buy out there. Oh, this is going to be annoying if it goes now. Damn it. Because now we got 91 again, 75. He's still not over the Dow. But I missed the S&P, unfortunately. If it's going to take off now, because now it's back to 55 where we started. $91, 74, 74.5, 74. Up, he's over. All right, so now he's at 55 again. He's at 91 something. He's at 76. Everybody's looking good. He's still not over 8 though. I'm going to cancel this. There's no point to it. It's too low. So now it's 91.3, 76. He's barely getting over. If the Dow is rejected again, I think I'm inclined to short the NASDAQ. If the Dow fails again to get over 24.8. So now I've got my finger on the short side of the NASDAQ to see what the Dow does. But if the Dow goes over, and he's over now everybody's over. Nope, looks like we're going up. So I'm going to take the Dow, because we have an easy stop on the Dow at 24.8. So it's a very small loss if we get over on the Dow. So I picked up 2 contracts. And if I stop, it's right, basically right here, 24,799. But because everybody consolidated under the lines and now they're popping over, it seems like a good spot to go long. But we're already at a weak bounce, so the strong bounce is 24.9. So that's my goal. If we're going to have a bullish run, we expect to get to 24.9 on a proper run. And again, this is all technical. There's no particular reason that we expect. There's no particular fundamental thing changing. There's no news flow I see that's causing this to go either way. In fact, Larry Kudlow is now on CNBC yammering about something, or they're just showing clips of him. I think they're just showing clips. Oh, how horrifying! Yeah, he must be flying to Washington now. So now we're up 25, 35, 55. Oh, there we go, 95 there. So you know what? I'm going to take one off. You know why? Because I lock in a little bit of profit to wipe out that loss I just had. Always a good habit, right? And now, see, now if I'm right, if we get to 900, this thing's going to make $500, which is fine, right? That's plenty of money to make while we're talking. And now I can go on to other things because now I'm not worried about it. Because I only have one short and I have one short and a good stop. Beyonce is touring. Yes, let's invest in Beyonce tickets. If we buy out like the whole thing, and we can then scout the stadium. Well, I'm sure there's more than one stadium, but Oh, but my daughter is actually really on top of this kind of stuff. So she says, in case anybody actually cares, I guess people who care about Beyonce, because I subscribe to Tidal, which I highly recommend, Tidal. It's a high-quality streaming service that Jay-Z owns. Which, that's her husband. I get it. So her husband owns this high-quality streaming service called Tidal, Tidal. It's like iTunes, except it's way, way better quality. Way, 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 way better quality. It costs $20 a month, and I basically just tell it what I want to hear. Any song, any album. I have very, very, very few things don't come up in it. And the quality is way better than iTunes. So if you're into music, it's cool. So apparently, only people who subscribe to Tidal, which I'm sure is limited because I hardly ever talk to people who actually know what it is. Those people get pre-sale access. Although I bet this will actually do a big thing to boost Tidal also. So if there was stock in Tidal, I would get it. But I'm sure Jay-Z just threw the money into it. Anyway. So it's very good. The thing, and Tidal compared to Eric Clapton's thing, Pomo, it needed, not Eric Clapton, sorry, Neil Young. Neil Young's Pomo needed a special decompressor for the music. Also phenomenal sound, but only limited amounts of albums were even put on it because you had to do a whole special process to do it. And then you had to have a decoder, and you couldn't carry the decoder around, because it wasn't portable. So that was no point. So that fell apart quickly. Tidal just puts a much better streaming, a much better quality, and they meticulously engineer everything, and they compress it up better and do a lot of things better to give you like a really just a better sound out of your phone and out of your earphones from listening online. So there's my plug for Tidal, and that's how you can get Beyonce tickets also. So it's always good to be first in line for things like that. What short puts in the LTP are still good for a new trade, or it's better to wait? No, if you looked at the LTP, here's the long-term portfolio, dun, 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 which we just reviewed today, and now it's down. Oh, it's down a bit. It's down to 15. Well, of course, the market's falling. It's down to 15.6%, which is like a point down from where it was. All of these are good. There's nothing wrong with any of these. These are all great short puts. Of course, you know this one's up 35% already, so it's a little played. But even so, even at 648, it's still not a bad sale because Berkshire's now at 207. So when I sell the 165 puts for $6 or whatever, 650, I'm promising to buy it for 158.50. So the thing's at 207. I'm getting a $50 discount. I'm getting a 25. I'm getting paid $650 to promise to buy Berkshire Hathaway at a 25% discount. I mean, you know, like imagine this was a Toyota Camry, and you know a Toyota Camry is a $30,000 car, or whatever they cost. I don't know, Frank. But let's say that you know it's a $30,000 car for a fact, and the dealer says to you, "Hey, if you promise to buy this Camry for $22,000, I'll pay you $1,000." And you say, "Well, that seems insane." Like, okay, I guess I'll do that because you know it's worth 30. You're going to get $1,000 for promising to buy it for 22. Why would you not do that? Only now. Why not with the stock? Well, maybe I can't afford to buy 500 shares of Berkshire Hathaway for 165. So you have to then consider at what point would it cause you such a loss that you'd stop out. Now, in a $500,000 long-term portfolio, being assigned 500 shares at $150 is $75,000. That would use $37,000 of our buying power. So our worst case scenario of $1 million buying power. So our worst case scenario is that we're using a partial allocation block to buy some Berkshire Hathaway, which is a stock that 20 years from now you still want to own. So even if it does drop to $100, I still don't have a problem with owning it at 150. I still wouldn't. I'm not gonna bail out of Berkshire Hathaway. And obviously, at some point Warren Buffett's going to die. But the same thing as Apple. Like when Steve Jobs died, everybody thought Apple was going to fall completely apart, and it skyrocketed later. It's only like some initial fear, and if that happens, if Warren Buffett does die, that's the time to really get into Berkshire Hathaway because he doesn't like run it. You know, Warren Buffett's a brilliant guy, but he's a brilliant guy at picking stocks and picking companies. He doesn't run those companies. In fact, he specifically only buys companies that run themselves well. So Berkshire Hathaway's corporate culture is to buy companies and leave them alone. So there's not going to be a huge damage. Now, going forward, they might not make as good as selections and picks and growth and so on and so forth. But Berkshire Hathaway is really an industrial conglomerate that owns a ton of stuff. And yes, they also have a portfolio of stocks, but that's not really the main way they make money. They don't make their money off a stock portfolio. They make their money off a portfolio of companies that they actually own. From cash flow is what they make their money on. So, you know, it's like Apple. I mean, you know, because the founder dies, the whole company doesn't stop functioning. It still does what it used to do. Anyway, so there's your downside. And every company, they got to think it through like that. What happens if this? What happens if that? If it's not just what do I do if the stock is down? Like, what do I do if Cheesecake Factory is down 20%? Well, why? Why would Cheesecake Factory go down 20%? Okay, it could go down with the market, in which case there's no reason to sell it at all. Right? If it goes down just because the market went down, then I've got no reason to sell it. It's perfectly good stock, and the market will come back at some point. It could go down on its own because it poisons people somehow, like food poisoning or something like that. It's a restaurant. It's, there's, millions of restaurants. Chipotle got hosed because there really wasn't anything wrong with Chipotle either. In fact, that's why we got long on Chipotle. We did the math on Chipotle, and it turns out that the average American eats a Chipotle once a week. If you divide out how many people eat at Chipotle and whatever, 320 million people a week eat at Chipotle. Now, they're not, so a lot of them are the same people eating 5 times. But conceptually, it's enough for basically every single person in America, on average, eats at Chipotle once a week. So therefore, this is why the food poisoning. Now, they serve fresh food, which is risky. That's why the fast food people don't serve fresh food, because fresh food is risky. And it's possible for there to be individual incidents of food poisoning because their suppliers are local and fresh. They don't have consistent national suppliers. They get fresh local ingredients from farms. And the more they expand, especially when you rapidly expand, if you rapidly expand and go after fresh local ingredients, and Whole Foods does this and doesn't screw it up, though. You have to have the quality control, and that's where Chipotle, it's their fault. They didn't have the quality control. But when you rapidly expand a fresh food business and you don't have an ironclad quality control on your suppliers, you leave yourself open to this kind of problem. But still, even though the point of Chipotle is it's easy when basically you're serving that many meals and they're fresh, people are going to get sick. And even if you vector an area, all you have to do, they don't have to get sick at Chipotle, because every day, that was the other statistic, every week, I think it was some crazy number, or let's say 10 million people a month get food poisoning. So one out of 30 people in America get food poisoning once a month from eating food. But now, when you say food poisoning, a lot of it is a stomach ache or whatever, but it's enough that it gets reported to the doctor. Like, I have a bad stomach ache, I have diarrhea, whatever crap, and they write down, probable food poisoning. Now, unfortunately for Chipotle, though, if somebody wants to screw them, all they have to do is gather the data. This is where data comes in handy for people who want us to be nasty. You gather all the data of people who got food poisoning, reported cases of food poisoning. You find some clusters, and it's very easy now. If there's a cluster of food poisoning in, let's say, in your neighborhood, let's say 100 people in your 10,000 person town got food poisoning, which would be unusual, but only unusual like usually it's 30 or 40, and now it's 100 this month. They then vector that with how many people in that town eat at Chipotle, and then they start a rumor that Chipotle poisoned people. Now, if you start the rumor and they start investigating, they will find out statistically that a certain portion of those people ate at Chipotle that week. Why? Because they do. That's what they do. They also ate at McDonald's, but nobody asked that question. They're blaming Chipotle. Most of the incidents that were blamed on Chipotle turned out not to be them. A couple of times they actually did something. But that's the problem, is once they actually do something, it's very easy to blame them for every other time. And it's very easy to start rumors to drive down the stock. So anyway, based on all that, we decided to go long on Chipotle because we knew that it was bullshit and it would subside at some point, and it did. But again, that's the point with Cheesecake Factory. So I'm sorry, we're talking about Cheesecake Factory. So in every case, in every stock, you have to think about the consequences of what you're doing. We sold 20 GNC $5 puts for $3. Well, that means that we're going to net in for $2, and we have to buy 2,000 at 2. So we're on the hook for $4,000 here. That's our worst case. If GNC goes bankrupt, it's going to cost us $4,000. That's an acceptable risk in a $500,000 portfolio. And if it goes well, we're going to make $6,000. So we're going to make 150% of our risk. And that's and do we really think GNC is going to go bankrupt? No, it's not a coin flip. We think GNC is actually much stronger than people think. So we're comfortable with the risk. GoPro. In the options opportunity portfolio, I decided to pull the plug on GoPro because I don't like the way they're running. They're not doing what I think they need to do to turn around. But in this portfolio, again, it's such a small amount. We sold an $8 put for $3.75, so we're netting in for like $4, and we're on the hook for $8,000. I don't think GoPro is going bankrupt. I just think that they're not achieving their business model as they should. And I think we're going to, and we're up a little bit now. If this turns red, I'll pull the plug. But I think probably we can grind up a little bit, make some more money, and we have no particular reason that we need to sell it. IBM, ridiculously short price. Philip Morris, ridiculously low price. SCE is also a good price on the entry there. Whirlpool, I don't get Whirlpool. I don't understand why it's still so cheap. We have specific tariffs on washing machines. I guess the steel tariff hurts them because they got to build their machines out of steel. But on the whole, I think it's I think that they're in good shape. So I don't see why that's low. Anyway, so this is the long-term portfolio. The coolest thing about our long-term portfolio review is we went over all these positions and we had 0 changes to make. So this portfolio is humming along, making $40,000 a month, and we don't even touch the positions. They're basically all just long-term 20 positions that we barely have to adjust. So it's perfect. It's right now. It's exactly doing what it's supposed to do. Now it's protected by the short-term portfolio. Now that should actually be doing good today because the market's going down, and we're pretty aggressive in our hedging. The short-term portfolio, is up another 5% today. It was up like 41% maybe. Now it's up 45%. So even though the long-term portfolio is flat, the short-term portfolio gained 5%. And this is cash, 45,000 profit so far this year, that we can throw into the long-term portfolio to improve our positions. But so far, obviously, we have no need to do that. And why is that? Because we pick very good bargain positions in the long-term portfolio. So even when the market goes down, they do not particularly correct. Oh, speaking of the market, what happened to that thing I left on? How are we doing? Ooh, look at that. 855, great. Up 265 so far. Now we're hitting this green line here, so now I'm going to start watching out in case I have to take my profits because this might get rejected. He's over 260. That's a good sign. He's coming up to 1600. We'll see how that goes. And he's at 7100. He's going to get rejected there most likely. So this is a good time for me to take a profit. So under 50, I'm going to take a profit now. So I'm going to watch. Maybe we get lucky and it pops through. Nope. All right. Come on. Oh, come on. Is that you guys following the profit and messing me up? All right, that's good. Oh, I forgot how much it was. It was like 230 bucks. So there you go. So we made 230 there, 90 there, and lost 70 there. So we're up about 250 so far. All right, so now we want to look for our next opportunity. So the next opportunity we see is we want to clear 1600 is too far to set as a line. So we want our immediate goal is going to be the NASDAQ at 7100, which I think is going to get rejected. That's where we started shorting the NASDAQ. So I don't think I want to go long where we started shorting. If the NASDAQ breaks over 7100, then the Dow has miles to catch up. So then we'll start looking for a Dow long. But at the moment, remember, this was our second goal. That's a strong bounce. So that's a strong bounce for the Dow. The NASDAQ's already making a strong bounce. Certainly for the day, it's more than a strong bounce. The S&P is making a strong bounce, and the Russell is over the strong bounce. So what we want to see then is either the Dow is going to confirm it by moving over this green line, and the NASDAQ will confirm it by breaking over 7,100, or this is the end of it, or we're having the strong bounce, and then we're going to be rejected and head down. And again, technical, I haven't looked at the news, so let's take a look at the news while we're waiting for this to resolve. Facebook paying up front for video news, blah, blah, blah. Don't care. Brinks, Twitter is a 3-year high. Department store slumps, that's part of the overall sell-off. Larry Kudlow, blah. All right, so nothing. United battles with pilots over scope rules. I don't know what that is, but United Airlines scares the crap out of me. What a horrible, horrible airline. They killed a dog. Read that story. United Airlines killed a dog. They made the person who took their dog on the plane, and they charge you for the dog too. So it's really messed up. They made the person who took their dog on the plane, shoved the dog into the overhead compartment where it died. Imagine having that flight. All right, now we're going over, so I'm going to get back in my Dow longs because, like I said, the Dow's got the furthest to catch up. Right, if we hit it, which 7,100 right here, if these guys start failing, I would short, but it looks to me like it's pretty strong. These are pretty strong lines. He's still not over that green line, but he's the guy I'm going to follow up. 98 over here. This is very key. The trading would be way too technical if everybody starts failing just because the NASDAQ hits 7,100. And before we were at 7,125 before we really turned back. So, just because I got out here doesn't mean I can't get back in. I didn't want to deal with the rejection of this line. But once we get over it, then I use that line as my stop. 99.75, 99.50. Come on, baby. You can do it. 99.25, 99.50. 71. Is he going to hold it? Nope. Tease. 99. 99.5. Really should pull the trigger here. All right, I'll get one. It's not going to hurt me. There we go. All right, so I got one. So we're in at 75 again. I forgot where I got out, but we're in at 75. So I skipped. I skipped the profit between here and here. It's really not a big deal. It's like $50. Better safe than sorry because I locked in that $235 gain. And now we'll see. Oh, look at that. That's going good. Okay. So now I can actually put a stop in over here because now I can make a stop. Oh, wow. Nice. So now I can follow it. Oh, look at that. 85. All right. So now I'm going to put a stop here so I can get back to work. So wait, where's my stop? Oh, wow. Look how fast it's going up. Oh, good call, Phil. All right. So I have a stop. Wait, forget 85. That's way too low now. Whoa, $200 already. Nice. All right, now we have a stop at 9. So I'm just going to put my stop in at 9 or 8.99. So now I have, yeah, this thing's going fast, huh? All right, so now if it falls back below 9, I'm going to stop out. But I've locked in about a $200 profit. Which means basically $400 since we started. Nah, I don't like that. 914. Because he got rejected here now. He actually made it to that line and got rejected. Yeah. 180, 200. I'm going to take it. Oh, come on. Okay. So I locked in. I got another 200. So now we're up to like $400 just on the Dow. So these two guys cancel out basically, and we're up 400 on the Dow trades. What's our next line? Now we want to see the NASDAQ poke over the pink line. And, well, that's good alliteration, right? Poke over the pink line. And the other guys are not in good positions. The next good cross we're going to get is 2770 on ES. What are we doing? We're looking for those fresh horses, right? Who's the next one who's going to make a nice move? Oh, by the way, pink line. The Dow is still lagging by a mile, right? Everybody, these guys are at their pink lines, which are the midpoints for the day. The S&P is below it, and the Dow is still actually way below it. Don't forget, 24.9 is a strong bounce line. On the way down, that should hold. If we're in a rally, the strong bounces should hold, not fail. So if it's a real rally, we're not going to go back below 24.9. And if we come back to 24.9, we stopped that up here. So if we come back, if we get a re-entry here, we're going to be in good shape. but I'm not seeing everybody's looking a little weaker. He failed 71, so I'm not going to jump on a re-entry if he's below 71. But again, news flow wise, I don't see any reason to short other than the fact that Larry Kudlow is now the Trump senior economic advisor. That's a good reason to short. All right, let's see if there's any questions. KMI has announced dividend increases 80 in 2020, blah, 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 blah. Currently, is it a good time for a bull call spread? Well, first of all, on a bull call spread, you don't make any dividends. So let's keep that in the KMI. You know, it's a good time for a bull call spread when the stock is cheap, not just because they announce a dividend. Don't forget the dividend means they're giving away their profits, which means you, as a shareholder, you get if you have a share, you get the profits, but you're going to sacrifice gains in the price of the stock, because if the profits are being distributed and not staying in the company, then the company does not become more valuable. Its only value is as a dividend payer machine. It's like having a bond. So the more, that's why these dividend companies don't pay that well or stay flat, because they're basically like a bond. They just keep giving away the profits. They're not going to appreciate in value if all they do is just keep paying out dividends. That's why sometimes when a company pulls a dividend, it's like the best thing for it. 1020 says, I like my free Pandora. Well, cheapskate. I used to actually manage a stereo store when I was in high school, so I'm kind of an audiophile. I take my music very seriously. So for me, it's like I can't listen to that crap. In fact, that's my problem with iTunes too. It's all the most of it's crap. You know, it's like it's such poor recording quality. I never listen. Tidal has been a blessing for me. I mean, I actually enjoy walking around listening to music again, which I haven't for years. Is Arba? Oh, we're supposed to look at the gasoline too. Okay, hang on. KMI. Anyway, we're talking about KMI. So, question one, is KMI cheap? Well, question one, where's KMI in the charts? Let's take a look at that. That's not good. Why did you do that? Oh, because I put it in the wrong place. Let's put it here, gallery view. So, this is what happens with a dividend-paying company, because they got no. It doesn't matter how good they look; they're giving away all their profits. So they're not expanding or doing anything. They're just basically, you know, I made money, I gave it away. I made money, I gave it away. I made money, I gave it away. That's what a dividend-paying company does. So they're not necessarily cheap, because any moment that anything happens to their business and causes them to give away less money. Now, you said they're raising their dividends, so probably they're okay. But at any moment, if they do that, they can start losing position. And then we say, well, what's their financial position of KMI? And right now, at 16 bucks, they're still a $36 billion company, and they are making about $1 billion. Oh, that's not their net income. That's their income from operations. Sorry. They're making nothing. They're making $200 million. So an incredible PE. And that's not net of dividends. I don't like that, actually. It's pretty bad. So now you want to wonder why. Well, first of all, they only have $13 billion in revenue. So how does a $13 billion revenue company have a $36 billion? Why are they 3 times revenues? Why is that? Why are they 3 times revenues as a market cap? Look, oh, there's their PE ratio. It didn't even register to me because it was so big. 1,600 times earnings. So, you know, just because they pay a dividend, I don't give a crap. Okay, this is not something I want to be investing in. They're crazy, and I bet they're borrowing money to pay that dividend right now. Let me see, because that dividend's got to be huge. Cash flow. So. Net income, $183 million. They borrowed $2.2 billion to purchase $1.4 billion in stock and pay 1.3 billion in dividends, and they're raising their dividends. Okay, you know what, Brian? Are you freaking nuts? Come on. Okay, what's the question? Currently, is it a good time for a bull call spread? No. Is it a good time for a put? No. It's a bad time. Go away. Walk away from the stock. Never speak of it again. Thank you. That's it. We're done with our analysis on that one. All right. Okay, gasoline. What's going on? Let me check my charts. Nope. Hang on. Active. All right, so everybody's taking a breather here. As we thought, it's pulling back a little bit, but not enough where I'd say, almost enough where I'd say short it. All right, yeah, in fact, yeah. Whoop, damn it. All right, catching it. Ow! I tried to short the NASDAQ. That's it. I'm not chasing it, though. Damn it. Why? Because everybody was turning down, so it looked like it would be a fun spot to short it. It won't cancel on me. Oh, there it goes. That happens sometimes. You make an order in the futures and you don't get it filled, but then it won't cancel either. They're like, it gets stuck somehow in the system. And then sometimes it fills like 2 minutes later and it's like, and you didn't want it anymore. So it should be fun gambling only in the futures. It should not be something you really care about. I mean, for me, it's like you got 2,500 here for the day, and these guys cancel out, so that's good money. Do that every day, you get yourself a nice little salary. So that's why he failed 95 real fast. So this does not bode well. So now, what's my best short? The Dow, the one we were long on. No, you're not getting away. Oh, you're not getting away. You're going the other way. There we go. So now I have 2 Dow shorts at 24.9. Why? Because he failed 95. He's clearly heading down. He's clearly heading down. The Dow is the only one that hadn't broken down yet. And now we'll see how that one goes. But notice this is all, I'm basically just playing my lines. I look for a solid support line, and when I get across on one of the indexes where I think it's going to have not jump right back over it on me, then I play it. And then what am I playing? I'm playing the lagger. I'm playing the one that's hasn't made a move yet after the other ones do. These guys were clearly falling down. He hadn't fallen down yet, so it looked like he would be a good one to play catch up. He's the fresh horse. So the same index we just made all that money long on, we're now making money short. And he went to 80, he went to 100. And I have zero conviction, by the way, on this trade. I mean, it's just like, because we don't know any lose flow other than Kudlow, which is all over the news right now. Wait, it says Kudlow was offered the role last night. I know he accepted, right? He offered the job to the phone while Kudlow was at dinner in Cipriani. What kind of detail is that? Oh, and Kudlow accepted. Yeah, I was going to say, it can't be a cliffhanger. It's whether he's going to accept or not. Larry, would you like to be Trump's economic advisor, or are you going to go back to your couch? Are you going to go back to yelling at people on the street? Oh, very nice. Look at this. 135 already. Oh, 95. $94, and I have no signs that say I should really take this off yet. If he goes to 95, I want to take at least one off. Should take that 135. 94, 94, 94, 62. So I care more about where these guys are than where this one is right now. I want confirmation that this is going down. 93, excellent. Now I have now I'm definitely not taking anything off. I want to see about 200. If I hit 200 here, I should take one off. 145. And notice I'm not trying to make massive money, right? We just made little tiny trades. That's all I've been doing today. See, 7 by 11, it means I made 11 trades so far. And basically, the average is about $200 a trade. $93, $92. So now, see, I notice that I don't bother. I just care about the last digits. So $93, $92, $62. It's easier to remember if you just pay attention to the last ones. Oh no. $93, $94, $95. Oh, just went the wrong way on me. Over $95. $93 again. $94. $94 over there. $94, $95. Nope, no good. Oh, it turned into a loss. That's annoying. $95 and $94. Nope, this is all turning ugly. All right, now, I'm not liking the setup, so I'm taking my money. I think that was it. Wait. Still short one. See, I'm not getting the right signals. Oh, what? You won't cancel? All right, so I ended up taking like a $20 loss. I'm no longer getting the good signal. See, these guys turned up, and he turned up, and now everybody, so he's back over his line. Forget it. All right, I don't feel like going bullish here because these guys just showed some serious weakness, but I'm certainly not going to go long either. So now I took the little loss, and I walk away and look for a better setup next time. All right, what were we going to talk about? Is the RBOB a short? All right, let's change the charts. And we're going to look at RB, gasoline. Ooh, I see, setting up for another. Well, we're going to find out. Ooh, now let's do some research. Oh, I like research. Research makes me happy. BZ is Brent. UNG V8. Whoop. Oh, no, sorry, UNG VG. Sorry, NG V8. NGV8 is the October gasoline contracts, the natural gas contracts. Sorry, we added those earlier. These are up $120 for the day. And then oil, of course, CL. All right, so here's my oils. If you're going to trade gasoline, you want to have your oil charts up, right? So gasoline's at 191. Natural gas doesn't count, but I just want to see how it's doing since I have a play on it. Oil is testing 61. And it looks like it's in a pretty bullish move right here. Now Brent only pulled back because it hit this pink line, so that doesn't really count yet. You want to give it a chance after it hits it for the first time. He just broke over his line, so it's not really a good spot. It's more of a good spot to go long than short. But I don't like gasoline this high, so I would be more inclined to short it. But it's Wednesday and the weekend is Thursday, so you got to be careful about that. So now I want facts. I don't have any really good reason to short it. So now let's see if we can find some facts on gasoline. So in this case, we're going to look at the petroleum status report. There it is. Yeah, I got to tell you, the person who uses Google a lot, to look up stuff, it's amazing how it totally. It anticipates what you want to ask it. It knows all the things you usually ask, so those come up first, and then it anticipates other things you may want to ask on the same subject based on other people's search requests. I mean, it's freaking great. And I'm sure when they have better AI, it's going to be totally amazing. I mean, it's really, really cool stuff. Until, of course, the AI turns on us and kills us all. But that's, for a few years, it's going to be really enjoyable. Let's see. And you got to wait for the 1 o'clock report. The 1 o'clock report is the key to the whole thing. So that gives us some real facts. So it was a weird report. We had 5 million barrels oil increase, and we had a 6.3 million barrel draw on gasoline and a huge 4.4 million draw on distillates. there were storms in the Northeast. And it's kind of weird because generally a storm will lower the demand for gasoline and diesel because planes get grounded and cars can't drive and so on and so forth in a big storm. So it's odd that we'd have an increase like that. So we want to look to see, well, why would we have an increase of gasoline? What happened? So we'll try to figure it out from this report if we can. Refinery activity. The input to refineries was 16 million barrels a day, which is, up from, it's in line with last week and up 500,000 barrels a day from the previous week. So more oil was going into the refineries. Refinery activity was the same, 88. Well, actually, it was a lot stronger than it was 2 weeks ago. It was 88% versus 85%. I'm sorry. Make this bigger. It'd probably be nicer for you guys. Okay. We see the 5 million barrel build in oil. We see a big draw, like almost 7 million, six something million barrels of gasoline. 4 million of distillate. All other oils flat, so we don't care about that. The SPR was flat. Wow, wait a minute. There it is. There's something. The Strategic Petroleum Reserve dropped 30 million barrels. Oh, that's from last year. Sorry. That's not the week before. That's last year. Silly me. Sorry. I'm thinking it's like that. I'm thinking it's a week before last because it said 3 on it. All right, forget that. So that doesn't matter. So over the course of the year, the SPR is down 30 million barrels. So that doesn't really matter. All right, so no change. Now, imports. Imports were the same, drastically down from last year. Though we're down almost 1 million barrels a day from last year. So every week we're getting 1 million less barrels import than we were last year. Exports, petroleum products going out, are really the same though. They're flat. So that doesn't count for anything there. The refineries, gasoline, there's a 1.5 here. There's 1 million more barrels of gasoline was supplied, but we had a draw on gasoline. Distillates, less distillates were supplied, but not much. All other products, blah, blah, blah. Nothing here. There's nothing here that tells us what happened or why we have that build. It's interesting because they supplied the same amount. They exported the same amount. The amount they exported is humongous, though. I mean, it's 2.7 times 7 is, oh, come on, I can do this in my head. It's about 14 and then 42, so 18 million something, 18.5 million barrels of oil were exported. So in other words, an entire day's consumption in the U.S. is for export. We're not really consuming this oil, we're exporting the oil. So that's why we're getting these wacky figures that don't make sense, because when you're exporting 18 million freaking barrels of oil in a week, you're going to get weird numbers. They don't mean that there's any real demand. And look at these prices. With virtually no changes in anything from last year. In fact, no drawdowns, no different supplies, no nothing. We are paying $62 a barrel from $48 last year. That's $14. That's whatever that works out to, $1,408. It's 30% more. That's crazy. There's no logic to that at all, that we should be paying 30% more. Meanwhile, gasoline is only 20% more. That means for the refiners, they're making less money per barrel. So it's not that good for the refiners either. But it's not stopping them from producing it. They're producing more than they produced last year. Well, they have to actually to make money, right? They're producing more, but they're shipping it overseas is what's happening. This is crazy, though. It's crazy. It's crazy that nobody really reports on the fact that 1 day's worth of our entire oil consumption is being exported out of the country. Anyway, so as RB is short, there's nothing here that says that that number was wrong, but it doesn't. There's nothing that says it was right either. There's nothing here that points to a good reason that should have happened. So probably overall RB is a short at 192. It's a little dangerous coming into the weekend, but I would be willing to go on that one. So let's see. How about we hit it? I'd rather get it at 192, but I don't know if we're going to get there. 235 is when the NYMEX closes. But I'm willing to do it. I'm willing to have a little bit of conviction up here, so I'm going to watch this for a second. All right, so this is 175, 172, 176, 77. So I just keep moving my little hand along with the elevator, and I try to lock in the best price I can get. If it falls below my range, I have to think about it carefully. Here's 80. Looks like it's going to make it, though. Looks like we're going to get that test of 192. 85, 83. And meanwhile, I'm looking at oil. I'm looking at these. Everyone's going up except natural gas. Natural gas doesn't really have anything to do with these guys. 90. 88, 83. He's going up though, see? And he's hitting resistance. So I cut him a break. I'm not going to count him as going down. If he's hitting the resistance line here, maybe it'll pop. I like shorting Brent. Frankly, I like shorting Brent at 65 though. Yeah, you know what? That being the case, I think I'm more inclined to do this because I don't see Brent really going much over either. So how about we take one at 80 and I'll take another one if it goes higher. Nope, not getting it. Annoying. All right, capitulate. Get rid of that one. All right, so now I have one short at. Oh, I already played this today. I forgot. I already have 500 on RB. All right, so we have one short at 78. So if I get another one short just around 192, my average would be 1189. My average would be like 89, which would be fine. So if it goes higher, I'll short another one, and I'm certainly happy to stick this one out and see how it goes for a day. Now, if it's not down by tomorrow afternoon, I'm probably going to bail because I don't want to be shorting into the weekend. That's super dangerous with gasoline. Unless it's had a really spectacular run. But I think Brent will be rejected at 65, and there is certainly no good news for oil. So I don't see why oil should get back over this pink line here, which is 61. So I don't see why. I don't think this oil, and it's at 86. So I don't think either our oil or Brent oil should go over these pink lines. And that being the case, then gasoline tends to follow oil, even though they are separate items. They do tend to follow each other very closely. So if oil is going to get rejected there, then gasoline is probably going to go down too. So we'll see what happens. So in that case, I looked and I saw no particular data. But if there's no data, then what the frick are they doing going up like this? That's the thing. Why would they bounce back so hard? That doesn't make sense either. So I bet against a silly looking play. Let's see what else is happening. News. Any news? Energy material gainers and losers. Well, that's relevant. Let's take a look. Who cares? Oh, all companies we can care less about. Completely unhelpful. Oh, nothing. So nothing is going on. It's like such a slow news day. Oh, here's top headlines. Stocks and yields lower if Theranos charge. Disney launches something. Bitcoin below 9,000. Oh, Google's not going to advertise Bitcoin anymore. That's good. GDP now forecast falls below 2%. Oh, I didn't hear that one. Oh, Jesus. All right, let's check that out. That's not good. Yeah, it makes sense after the bad retail reports. This is so funny. This is the Atlanta Fed, the people who are making the economic policy. This is their estimate of the GDP, and this is for Q1. So they start forecasting Q1 on January 26th, and their opening bid was 4.2%. Then they raised it a week later to 5.4%. This is their prediction. Since then, every single data point, except for this one, has led them to revise it downward, and now we're at 1.9%. Meanwhile, the blue chip consensus of analysts, let's give them a little bit of credit. So regular analysts, normal people, never thought this was right, and now they because of they're kind of like going, well, maybe there's something better than we think, and they're like, nah, and now everybody's coming down to below 2%, which is disastrous, especially with the Trump tax cuts now in effect and failing. So this is not good. So that's what I mean when they say GDP now. It's the thing the Atlanta Fed does to forecast the GDP. But the sad thing is they have these freaking meetings, and this is what they're looking at. They're looking at obviously they're going by their own charts. I mean, how could you be this wrong? This is only 2 months ago. They said 5.4% growth. When they said it, I was like, are you kidding me? How do we become China all of a sudden that we get 5.25% GDP growth? That makes no sense at all. I was like, how do you suddenly jump to a 5% pace from 2% to 2.5% that we were in Q4? That would make no sense at all. Like what, and it was because of the Trump tax cuts. It's because they're going by, because he's going to do the stimulus, he's going to do this, and everything's going to be so great, and America's going to be great again, and blah, blah, blah. Everyone buys into this bullshit. But then when you actually see the data and you find out that these companies who said they were giving $1,000 bonus to their employees, they don't give the raises. They only give them $1,000 bonuses and be like, hey, have a nice year. Guy's making $50,000. He gets a $1,000 bonus and no raise. He'd rather have a raise. Your bonus is 2% of your salary. It's going to get taxed out anyway. You end up taking home like $400. You end up taking home $600, maybe $500. Good luck. And that's it, and no raise. And so that's it. You get a one-time little $500 bonus. You get to go to the movies and have dinner, and then you're back to your crappy salary. But meanwhile, inflation is killing you. That's the Trump tax cut. It's just complete crap. And you can see it. And in fact, that's what's killing the retail sales, because people were spending on their credit cards and racking up debt and doing all this because they were being promised by our leaders that things were going to be so great next year, and you're going to be so happy, and your checks are going to be so much bigger than they were. So everybody in Christmas believes Trump, and they go out and buy crap. And now that they see their actual paycheck in them, and by now everyone's had a chance to go to their bosses and go to their accountants and say, does this include the tax cut? What happened to the tax cut? And they're like, hey, there's a tax cut. Enjoy it. That 40-cent difference in your paycheck is your tax cut. The middle class got completely, totally, well, no, the middle class didn't get as screwed as the lower class, but the lower class, that's a sad thing to say. But the middle class, it's funny, in England they have no problem saying lower class. It's upper class and lower class, and they never think there was never a middle class in England, and they never had any problem with it. Well, the upper class people were like, well, the lower classes, blah blah blah. So, we have an upper class. That's what we're like there. We have an upper class and a lower class. There really isn't much of a middle class left. But what few people are in the middle class are kind of treading water. The lower class, which is basically now the bottom 60% of the country. Bottom 60% of the country lives paycheck to paycheck, literally paycheck to paycheck, literally has no possible safety net. If anything happens to them, if they get sick, if this or that, they go bankrupt. That's it. They're just one disease away from going bankrupt, one car accident, one disease, one whatever. All these people live paycheck to paycheck. The bottom 60%. Now, oh, I read a great article this weekend. I posted it. I posted it to the site. I forgot what it was though. There's somebody did a really big study on rural America, and found out, like, why are you so pissed? What happened? And this is why they're pissed. But for some reason, they think that the Republicans are the solution to this, whereas realistically, they're the problem. They're the cause of it. We're not going to get into that now, but the point being that the rural America, or the lower class, or the bottom 60% of this country, they live struggling lives, constant struggle to make ends meet. And what they think of a regulation as is the regulations by the credit card companies that tell them this and that, and the regulations by the car company that repossesses your car, and the regulations by the mortgage company that sends you a default notice. That's what they think regulations are. They don't think regulations are the Clean Air Act and the Water Act and things like that. To them, regulations are, well, I mean, there is some for the farmers, they have some of that stuff. But to them, regulations are all these rules and things. Every single turn they make is something puts them down and says, you can't do this, you can't do that, you've got to pay this, you've got to pay that, there's no excuses, you don't get out of it, so on and so forth. And it's frustrating. I don't know how many of you guys have lived like that, but it's very frustrating. And there's no longer the kind of upward mobility that we used to have. So in other words, there used to be enough upward mobility in this country where somebody in your family did well. You know, in the 50s and the 60s, somebody in your family was usually successful. And also in the 50s and 60s, somebody in your family was successful, and they were also still felt that sense of family obligation where they would probably help you out in an emergency. And, you know, your uncle would leave you money and you'd have a little retirement, whatever. And that's because everybody who died had money. Also, another factor, right? If people had retirement accounts and they had money and they weren't drained of every last cent when they died. Now, forget it. The bank gives you a reverse mortgage. They put you in a nursing home that takes all your Social Security number. Basically, when you go into the nursing home, you sign away your savings. You have to give them these, basically like, here's my life savings, and then when I run out of that, you can bleed me dry on Social Security and everything else, and that's it. And when I'm penniless, you can throw me out. That's how these homes work now, and they take all your money. That's when you go into a home. That's what you're doing. You have nothing left for your children. So in the old days, people would inherit money. It was a normal thing to inherit some money. Well, it didn't have to be a lot. You get an extra $10,000. That was fantastic, right? That doesn't happen anymore. You don't inherit money anymore. Colleges for your kids, if you want to send your kids to college, is a bankrupting experience for a lot of people. I mean, this is much of the house in middle America. So you're buying a house, but your kids, so you're buying a house worth of money to give your kids an education, so when they get out of college, if they don't have a good job, you can't afford to buy them a house. And that was the other thing. Parents used to have money saved up for retirement. They would take the money and they would help their kids buy houses and so on and so forth. More rules and regulations, right? They can't do that anymore. You can't, certain gift rules on mortgages and things like that. So life in middle America has gotten super, super, super tough. And life for the bottom 60%, super tough. And that's it. They just work really, really hard just to stay afloat. And they got nothing at the end. There is no retirement. There is no rainbow at the end of the thing or anything like that. They work until they die, and that's it. And they see their kids struggle and go down the same path. So of course they're pissed. You know, most people here, if you're sitting here, if you got time to sit here and listen to me babble on about stocks for 2 hours, you got, you know, you broke out of that cycle. You've got enough money to invest. You've done something, but you got to recognize how hard it is for people to do that. So I was saying, so it used to be that people had a sense of family obligation, and that your rich uncle would help you out. Remember the concept of a rich uncle? If you're old enough, everybody had a rich uncle or a cousin that did good or whatever, and you would be, that's how you would get your house money. That's how you would get something. You borrow some money from them. They'd help you start a business. They'd do whatever. If there's a crisis in the family, they show up with a check. That was normal. That's not normal anymore. People are so out of touch with their own families. There's no support groups anymore. And also also the economic mobility has halted to the point where if your family is poor, your family stays poor, and everyone in your family stays poor. Nobody breaks out. That's what's happening. Is there's no single person who makes it. And that's really what's killing people's faith in everything, is because there is no success story. There are people you read about or something like that, but there's no like direct thing where you say, oh yeah, my uncle got this and that. Like, you know, when I was a kid, I had a fairly successful family, but I mean, my uncle owned a big recording studio and he did well, and my other uncle invested in things and he did good. Another uncle had a clothing business and was doing good. So I had lots of examples in my family, people who are successful. So it was obvious that was fine, that everything was fine, and there were always people to help out. Oh, when you had a wedding or a bar mitzvah or something like that, then money flows in, right? When I had a bar mitzvah, I got some crazy amount of money, like $3,000, which was a lot of money back in 1976, from my relatives. I got like $3,000. I was like, damn, that was great. You know, that again doesn't happen anymore. People don't have that kind of money. So people, it's a big difference. I mean, you know, look, for $3,000 for me was a car, and I already had a car, but it was another car. Not when I was 13, I had a car. I mean, it was plenty of money. I put it in my college fund actually. $500 was my first car, but it was a lot of money, and then you had something to go by. So my first year of college was like taken care of at the time by having a party. And obviously, you know, most of the money came from 4 people. Like a few of my successful relatives put most of the money in, and everybody else just came. But that's normal. But that's the problem. Imagine not having any successful relatives. And I bet a lot of you guys are the successful relative in your family. And it's a huge burden, right? Because you're the only one. And you're handing out and handing out and handing out. That's not good either. But that's what happens when you narrow when there's a lot of inequality and you have this very narrow group that makes a lot of money and everybody else is struggling. And that's what we have. And where do you see it show up? You see it show up in things like this. People stop spending. They borrow. So everybody borrowed too much money thinking that things were going to be great this year. So they borrowed into the end of last year. The Atlanta Fed gets all excited, raises their estimate for the economy. And now you get in the backlash of everybody's like, oh my God, we borrowed way too much money. We're not getting the kind of paycheck increases we thought we were going to get. And we're screwed. And we're going to have to stop spending. And here's your rebound. You see it in this. You see it in the GDP here. And you see it in the retail spending reports. And again, this is why I'm not bullish on the market right now. It's overextended. And it's not supportable by where we are. Oh, shit. Who didn't tell me gasoline was going up? Guys. All right, well, I said I was going to add another short, so I will add another short. Hopefully, see, this is right into the NYMEX close, so hopefully I'm going to just catch this and be done with it. Oh, there it is. All right, that's not good. So now I have 2 short at 192.05. And my average is 192.05. We're not at 192.05, so my break even is way down here. But I do know that 235 is a NYMEX close, and we had a big push into the close. Hopefully, it'll settle down now. He didn't make 65, so I'm not too worried. He didn't make 61, so I'm not too worried. I just think gasoline got way overextended. But what I would like is to get back to here and get back to 1, so I can be even, and then I can hold that one overnight. So I'll be at the 192 I wanted to be at. But unfortunately, well, you know, with the one contract, so we'll see what happens. Oh, but at least natural gas took off, so that balances that. Oh, see, my $200 loss here is made up by my $200 gain there. Everything evens out. All right, questions. Yes, good job, Neil. You were right. They want to regulate the laws when broken. Yeah, very few are willing to own their situation. They're always looking. That's not true. I don't agree with that. It's not that people aren't willing to own their situation. It's very, very hard to break out of a cycle of poverty, and we've known this since the '60s. Okay, but breaking the cycle of poverty has been the cornerstone of democratic thinking since the '60s. There's been a million studies of this, and it's well documented. But if you refuse to believe it, I'm not going to sit here and try to change your mind. You know, you don't pull yourself up by your bootstraps. There's a million blocks to it, and it's very, very difficult to get on an even playing field when you've got an entitled class that has access to money and loans and education and so on and so forth, and then you've got everybody else who's outside of the game. And it's extremely difficult to get in there and work your way up the ladder like people used to. It used to be so much easier to do that stuff. Do you ever play 10 Years Futures? No, I do not. I don't have that kind of patience. Phil, if time allows, are there any circumstances you would consider owning stocks directly? All the time. If they pay a dividend. If they don't pay a dividend, I don't really see much point in owning a stock. And what do you think of CVS or PG? They're both solid companies, but again, it's a question of, you know, look, CVS. I don't like CVS compared to Walgreens for one thing, and I think neither one of them are cheap. So let's take a look. If Walgreens was cheap, I'm pretty sure we'd be in it because I do love them. WBA is Walgreens, Boots Alliance. Boots, by the way, if you go to Europe, Boots is such a kick-ass store, and Walgreens is turning into like a Boots. Oh, they are getting cheap again. Good. All right. I think this is a totally superior chain, Walgreens Boots. They're back to where we like to buy them. I didn't realize they'd come down. So somewhere around here, we're probably going to sell some puts. So there's that. We'll compare them later. I'll show you what. And then CVS. Also got, well, isn't it weird they're the same price? CVS also cheap and low in the channel. So now we got to compare them financially and see what they say. All right, so CVS, $67 billion, says it has a 10 PE. Let's see if that matches. That means they should be earning $6 billion. And yes, they are. Okay, good job. Okay, 153, 177, 184. That's, I mean, let's see. It's all right, 24 means that's more than 10% there. But then it slowed down drastically, the growth in revenues. So meanwhile, what are they doing while they're doing that? Are they growing profit? Yeah, they are. I don't mind if somebody's slowing their revenue growth. Look, like Victoria's Secret, like limited brands. I don't mind if somebody slows their revenue growth on purpose, which sometimes people do. Limited brands is what people didn't understand about them last year. They cut their less successful lines. Why? They said, look, we only have this much space in our stores, and we have two product lines that bathing suits, for one thing. It was bathing suits and something else. They said we have two product lines that aren't making enough money. So it's like any store, but you have to think about that. It's like if you have shelf space, you have 4 shelves, and you have 3 products that you sell for $1 and make 20%, so you make 20 cents each. But then you have 1 product that you sell for $1 and you make 10 cents. And at some point you say, well, what if we took this 10 cent? What if we took the thing that's 10 cents profit away and put another 20 cent profit thing in its place? And all of a sudden you might have less sales, but your profits go up. And that's what these guys do. So CVS is constantly, companies like CVS are constantly playing with their mix of products. So I look more to see what the earnings are doing and if they're doing a good job. And they seem to be doing okay, actually. Now, you don't know if there's a tax issue. Look at this, though. Oh, no, they're not. I take that back. No, they did something weird with their taxes. So they didn't actually make more money. They just paid less taxes. 1.6, 5.3 plus 1.6 is 6.9. So they actually made less money than they made before, except they just paid less taxes. And you don't expect that to continue. All right. So either way, though, it's a respectable amount of money. If they're in the even if they're at 5 billion, the PE is like 12, 13, 14, about 14. So that's fine. Now Walgreens. Walgreens, on the other hand, is making $4 billion. They don't have any weird taxes. Actually, they are going progressively down, but not some severe weird thing like CVS. Sales are kind of flattish though. But now in Walgreens' case, though, they just made a huge acquisition, or their Walgreens Boots merger. Plus, they picked up all these Rite Aid stores. So there's a lot of internal costs and synergies that are just starting to catch on for these guys. So I'll give them that. But let's say the same PE of like 14 means that their valuation, if it's going to be in line with CVS, their valuation is going to be about 56. So let's see what they're at. 67. So they're actually pricier. And it says right there, 18.82. So Walgreens is pricier. And that means, frankly, okay, I agree that CVS is actually a good deal, but I still like Walgreens for growth. But it means, in my case, I wouldn't probably buy either one unless one of them got drastically cheaper. But that's that. And then, by the way, it's just looking at the numbers without worrying about like how they're growing and what they're doing. Like I said, though, I think these guys are going to grow nicely. I think they're going to get some synergies from, after they get all this, after they get running smoothly and get their stores right. But at the moment, it's not showing up. The numbers aren't there to make a real good investment. Let's see if we see what you want to look for in Walgreens, because, like I said, because of the mergers, you want to look at some strong quarterly improvement. And what do we have here? We don't have that. We have, who knows if they have good and bad quarters, but they have no particular growth here, nothing exciting going on in revenue. So there's nothing going on here that indicates that they're turning around or doing anything exciting right now. All right, and then we'll flip over to CVS. And they are progressively increasing their revenue quarter by quarter. They are progressively increasing their profit, their income quarter by quarter. Taxes are weird. I wish they would stop doing that. Their taxes are insane. But even taking this out, now taking out $500,000 here, you still have some impressive numbers going forward. Well, it's not really taking out $500,000. They have a credit being applied here of $500,000 versus what should be $7 million. So this number isn't just $500,000. It's really 1.3, because they should have paid 7 something. Instead, they took a $500 million credit. So that's like 13. And now you subtract 13 from this, but you still get, even if you subtract 13 out of this quarter, you still have $1.8 million, which is still a really nice growth path. Okay, so yeah. I had to come around on CVS. I like them a lot better than I thought I did. That is a good deal. So what was your actual question then? Oh, CVS bought Aetna. I forgot about that. You're right. Okay, well, that's a big deal. I do like that. I like that combination. It's actually smart. Oh, wait, RBOB, I can read just one. Thank you. Hang on. Oh, I love it when a plan comes together. All right, so I'm watching it now. All right, thanks for paying attention for me. I appreciate that. As soon as it turns up, I'm going to quit, but I'm thrilled to get this thing. G6. Nope. All right, fuck it. All right, there we go. All right, up 184 bucks. That's nice. Ah, I feel much better. All right, cool. There's another 200 bucks. Boy, we're having a hell of a day, aren't we? All right. So now, all right, P&G. Now, P&G, on the other hand, very boring. Boring is good, though. It depends how you're going to use it. These guys are, I'm not even going to bother with a big thing. I'll just take a look at what it says. They're at 21, though. I'm not excited by 21. It's a good, boring stock to hold long-term, P&G. They pay a nice dividend. But, you know, for 80 bucks, it's a big commitment. So I'm not so thrilled if I'm going to do that. CVS, I like because it's got a value component to it, too. And I do like the combination with Aetna, so that's good. So let's look at the options on CVS. They're at 66. If you sell, see here, if you sell the $60 puts for like $5. Now, I always look at if I'm going to try to sell it, especially if they're down 140 today, so there's no way I'd pay anything near the lower price, or sell for the lower price. 460 to 610 is $1.50. 75 cents. So I split the difference. 75 cents plus 460 is 535. So I would want at least, and the last sale was 520, so that makes sense. I would want at least 535 for these. But if you sell the $60 puts, let's say for $5, obviously you can sell them for $5. If you sell these $60 puts for $5, you're netting in for $55. That's $10 below the current price, so it's like almost a 20% discount. So do I like that play? Yeah, I can accept being assigned CVS at that price. I don't have any problem with that. So given those choices, that's where I'd go. I'd go with that. I'd go with those short puts. That's why, yes, an education and vocation not only helps everyone. It helps. This is a short-sighted thing about the economy. It helps businesses because the businesses want educated workers, but they don't want too educated, because they're too educated. They start saying, "Well, why aren't you paying me more of your profits?" So it's a fine line. You don't want your workers getting too smart. You end up like Europe. You know, then the workers start asking you, saying, "Hey, you know what? If you don't want to pay us, we can start our own company and compete against you." Which used to be easy to do, right? Now it's hard to do. It used to be very easy. It's like basically in almost any company, though, still, if you really organize the workers, you could all just quit tomorrow, walk across the street. This is where the contracts kill you, though. But you can quit tomorrow, walk across the street, start another company, buy the equipment that your boss had, and say, "Okay, now we're providing that service." You know, people in this country have no balls. They just don't, they don't get out there and fight for their wages and stuff like that. But that's, because basically there's been a war on organizing labor for decades. All right, so thank you, Brendan. You made me some money. I appreciate that. And Neil, good job, guys. That's how we pay attention to these things. See, I like that. If it's a team effort, then it's easier for me to teach you guys stuff and not have to worry about like things I got hanging. 3 says, trying to learn how you pick where to short puts, what kind of bull spread to buy. Well, I pick at a value I'm willing to pay. So if I look at CVS, I looked at the numbers just now, I'm certainly willing to buy them for 60, because 20% below where they are now is a PE well below 10. All right, so any company that I don't think is going bankrupt that I can buy for 10 times earnings is something that I don't mind putting in my portfolio. So that's the easy part. As to a bull call spread, do I think CVS is horribly undervalued? I'm not sure about that part, because they are swallowing a big acquisition. But it's not. In fact, they actually, and again, whoever suggested CVS was very right on the ball there. That was, who said that? That was you. All right, good job. Turns out CVS is definitely better than Walgreens now, because Walgreens is also swallowing an acquisition, but their acquisition is of a competitor, or they have that merger with Boots, and then they picking up the Rite Aid. They now have to go through the painful process of negotiating leases and getting out of leases here and selling leases and subletting. And, you know, they're shuffling stores and closing this and opening that, and moving staff around. It's a nightmare and a lot of costs associated with what they're doing to grow. Whereas the CVS with Aetna, they're totally different businesses. So there's not really a big integration cost. What they're going to do is they're going to put a new layer in that's going to then merge the two businesses or make them work together better. But that's actually that's not even hard, because all they're really doing is sort of directing business to CVS. You know, they're directing their clients who are already there to use CVS drugs. So it's a lot easier of an integration. It's not going to be so disruptive for CVS and costly. So I like the whole thing. That whole thing seems to be like a good idea. So would I go with a bull call spread also? I wouldn't say no to it. And again, now if I'm picking a bull call spread, what's my target? I don't really think CVS is going to rocket higher, but certainly I think 70 is very realistic. So in that case, if I sold like 10 of these guys and picked up $5,000, you know, rounding, like I said, I'd rather get 535. But if I picked up 10 of these guys and collected $5,000, then I have $5,000 to spend. The 60s, and this is messy, but the 60s are, look at these spreads, are so wide. The last sale on the 60s was $13.35. The last sale on the 55s was $16. Would I pay $265 to be in the 55s instead? Yes. Now, would I pay another $4 to be in the 50s? No, that's crazy. So the 55 seem to be a good strike. And that is, what do we say it is? It's going to be $16, let's say. And then how much do I have? We picked up $5 from the spreads. So that means that something around $9 or $10 is good. And that means we can get the 55-65 spread. But now, and then I do the same thing on the 65s. If these guys are going to be like $10 or $9.50, but these guys are $8.50, even though it says $9.50. That was just the last sale. So for $1, do I want $2.50 more upside? Yeah, I definitely believe that we can get to $67.50. Now, for another $1, do I want $5 more upside? Yeah. Okay. So now I say this. Okay, so these guys are $7.45. These are the 70 short calls. The 55 longs are $16. So 16 minus 745 is $8.55. So if I get this spread for $8.55 minus this spread for $5.35, I'm sorry, what were they? The short 55, the short 60s for $5.35. I forgot the number now. Was it $8.35? Sounds right. Okay, so let's say it's $3. Okay, so now I'm in the 55.70, a $15 spread for a net of $3. Okay, so now 58. Anything above 58, you make money, but of course you've got to cross. You got to cross 55. I'm not 55, 65. I'm sorry. You got to cross 60. So once we're over 60, then our net is 58. So our break even is roughly 58, or I'm sorry, break even is 59. But once we're over 60, the puts expire. There's no value to the puts, and then everything above that is profit up to $12. So you can make $12 back on your $3 spread. So I like that enough where I would take that. I wouldn't mind taking that position. And my logic would be I'd go with like 10 of each, and if it goes lower, I would be inclined to use money to roll my $55 puts to a lower strike. So every time I get a chance to roll my 55s down $5 for $2.50, let's say spending less than half the money on the roll, I would add some money to the trade. And once I get my spread a little bit wider, then I could sell some calls also and start collecting that money back. All right, P&G. I'm confused. All right, got to finish it up now, guys. PG changes along the lines of what Walmart is doing, but on the manufacturing side, might make an ideal leap pick. No, I don't. I'm sorry, they're not cheap enough. It's ideal for you, but it's not something I would go for. Would you be willing to sell some puts on Amazon? No freaking way. I would buy them if they weren't so expensive. No, I think Amazon is insanely priced. I have no interest at all in owning Amazon. Not for $1,600, not for $1,500, not for $1,300. If they go down to like $800, I might be interested. And I'm not even sure if I would be, because if they go to $800 then something really bad happened and maybe they're not worth it. No, it's a great big freaking retail store that doesn't make any money. It's not. And yes, they get into other stuff, but it's not enough. They're not Berkshire Hathaway. And Berkshire Hathaway is Berkshire Hathaway. I could buy them instead. What about a CVS butterfly play too dangerous? Yes, too dangerous because they're too undervalued. I don't want somebody who's undervalued for a butterfly play. I want somebody who's fairly valued. All right, so we're going to wrap it up here. Thank you all for coming. We're going to just double check we'll check these charts and see what we're doing. Well, we're back towards the lows here. Not good. I did get out of all my longs on the indexes, right? So what do I have left? Oh, no. Gasoline is betraying me. I still like this overnight. I think they're going to go down. He's not making a 65. He's not making 61. As long as he's under 65 Brent, as long as our oil's under 61, I'm willing to stick with this gasoline trade. Plus, I won't lose any money most likely because I've already got an $80 profit, which is whittling away. But I've got a nice profit on it. So basically, I probably only go to even before I would get stopped out. But if he's under 65 Brent and if regular oil is under 61, I don't see any reason why I should bail on this trade. All right, now set the other shorts back up. So YM and gasoline, I'm not interested in taking profits unless we're up around 290 or so. Not gas, I mean natural gas, sorry. So YM, ES. Shoot. NQ. No. /NQ. There we go. And RTY, which I have to get used to because I don't do TF anymore. All right, so we're a little bouncy on the indexes now. I don't have 0, 0, 0, 0. Good, I'm flat. All right, I'm not inclined to play for anything on the indexes, so just going to leave it off with just that gasoline trade riding. And I think, as far as I can tell, I made about $700 in the webinar today, so that's pretty good. So I hope that was worth it for everybody, and we'll do it again next week. Okay, thanks a lot.